Hello, I hope that you're doing well. Today we're discussing financial accounting and management accounting, and particularly looking at what is the difference between these, two types of accounting. Let's begin with financial accounting. So financial accounting is actually the process of identifying information, being able to identify financial transactions, or economic events, and then recording those transactions or economic events that you have identified, summarizing and analyzing those transactions and reporting them in a financial statement. So whether as a business or, as an accountant or a business person, you have a lot of transactions, economic transactions that you can identify either through some source documents or so. You're able to then, identify those unique transactions, record them, summarize them, analyze those transactions using and reporting them in the financial statements. In this channel, you see that we've discussed a lot of financial statements, the analysis, financial statements, like whether it's the income statement, it's the statement of financial position, it is your cash flow statements and all of those. So you reporting all of these unique transactions in your financial statement is your financial accounting. What financial accounting does is that it looks at, it looks at what has happened in the past. So you have your accounting period perhaps between, say, June and July, or let's say between January to December of a year. So your financial accounting would be as at December of that year, so at the end of the financial period. You're looking backward, so you're looking at what has happened, the historical record of what the company, has done over the past period. That's what you do, and that's what your, financial statements would be provided. So financial statement is backward looking, it's historical looking, it looks at what has happened in the past. Usually, your financial statements, your financial accounting is meant for external purposes. So it's meant for shareholders can look at your financial statements or financial accounting information. Employees can look at it, competitors can look at it, potential investors can look at it, and all of this helps them to make informed decision. So for a potential investor, for example, looking at your income statement or your statement of financial position or whatever statement, looking at any of the financial statement, the potential investor can decide whether to, invest their money in your business or invest in alternatives. Financial accounting is also a legal requirement, for your company. So it is legally required for you to publish your financial accounting information and make it public, so that the public external stakeholders especially can make a decision on the basis of your accounting information. So it's legally required for companies to produce financial statements, financial accounting information. Because I had mentioned earlier on that, your financial accounting information, your financial statements looks backward, it's historical in nature, because you can use it for planning. It is very unsuitable for planning. You can use it for control, because what has happened has happened. You can't change what has happened. You can use it to make any decision about what has already happened, because you're reflecting on the past. You're reflecting on the past. So if you're intending to, plan, have strategies for your business and all of that, it is not going to be financial accounting information that would help with that. It is not very suitable for planning, because it is what has already been done. You can't really change anything about the past. You can only look forward to the future. Okay, so that's accounting information. And then the second bit is the management accounting. So that's financial accounting. So the other bit is the management accounting. Management accounting, unlike financial accounting, is not meant for the public. So, when we're discussing financial accounting, we said there's a legal requirement to publish financial accounting information and to make it available for the public. Management accounting, on the other hand, is not meant for publication. It's not meant for the public. It's meant to be used internally by managers within the company. So what management accounting does is it provides you with, information around what is happening at the moment in the business. What is the current thing happening? What are the recent occurrences? What are future estimates of our performance? And then that helps us to be able to make decisions, to be able to plan, be able to, drop some strategies for the business. So unlike, financial accounting that doesn't help us, that is not very useful, in decision-making, planning and control, management accounting is very useful in that. Like I've mentioned earlier, management accounting is also not required. It's not legally required. So there's no legal requirement for any business to to produce management accounting. It is actually for the benefit of the business, for the business to have management accounting, because it then helps them to make changes, know how they are performing and the necessary changes that they need to make, strategies they need to put in place, what sort of controls need to be put in place, and all of that. Okay, so what's the key difference, between management and financial information, management accounting and financial accounting that we have discussed? What you will find out is that management accounting, what it does is then it provides information for stakeholders like shareholders, investors, creditors, all of those who are outside of the organization, who can't really tell what is happening in the organization. But you need some form of accounting information to be able to make decisions, about whether investing in the organization, about whether you should give loans. As a bank, for example, how much of loans should you give to an organization? If you're to be a supplier, what sort of credit plan would you have for the organization? But all of these decisions you can only make when you have prior knowledge of the financial worthiness or strength of this organization, and that is provided in the financial accounting information. Management accounting, on the other hand, provides information for managers. So it is for managers to be able to, put some set of controls in place, be able to plan for the future, have some strategies to be able to guide performances, look around what is the current thing that we're having at the moment, what are the recent occurrences, how can we plan for the future, and all of those. And that's what management accounting is about. Okay, so in summary, when we're differentiating between management and financial information, it actually has to do with key issues around users. So with management accounting, the users of management accounting is actually managers who help to plan things within the organization. But with financial accounting, external users are mainly the ones who use financial accounting because it helps them to make informed decisions. Also, with financial accounting, the nature of the reports that is being produced, you'll find out that, it's general purpose. It tries to cover everything about what the business is doing. How is our cash flow statement? What is the snapshot of our position at this point in time? What is this? Or how much profits or losses are we making? So it kind of generally touches on, important things within the organization. With management accounting, it discusses specific things within the organization, provides specific information that will help with planning. So we're looking at our budgeting, we're looking at our cost analysis, we're looking at specific things so that we can make improvements within the organization. Financial accounting, on the other, on one hand, also doesn't require a lot of very detailed information. You just want to give an overview, a broad overview. With management accounting, you need very detailed information so that it would help managers be able to make decisions, set controls in place, and all of that. Management accounting is not legally required to be published. There's no regulation around how management accounting should be prepared and all of those. But with financial accounting, there is accounting regulations. There's the existence of regulations that need to be followed in its preparation. My financial accounting can be reported, annually, biannually, and all of those. With management accounting, there's not really a specific period as to when the management accounting information should be provided. It is as needed by the manager. So it could be as short as daily, weekly, monthly. It depends on what is required, what decisions needs to be made within the organization. So it is as required by the managers. Financial accounting looks at the past. It is very historical in nature. Management accounting, on the other hand, does not look at the past. It looks at what is happening at the moment. It looks it looks forward to the future. So financial information accounting usually, provides us with a range of financial information. Management accounting, on the other hand, doesn't just focus on financial information. It includes also non-financial information. So that, because, as a manager who wants to, pull out strategies for the business, you're going to consider not just the financial elements of information that you have. You also need to look at the non-financial elements also of the business. So in short, that is it. That's just the basic difference between financial and management accounting. Okay, I'll stop here and I'll see you in our next video.